And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NQ for Wednesday, April 28th, 2021. Well, they came, they saw, they went. According to the news stories that I'm reading, Apple just had a blowout quarter. Not a big surprise, although the stock did initially jump. I believe it jumped about $7 from where it closed. It got up almost 140. Maybe it did touch 140. And then it's pulled back. Now it's up about $3 from the close. And I went and I looked at the earnings report, and yeah, I mean, their report versus expectations, they blew the doors off. They are a strong, very profitable company, and also put $90 billion into their buyback program. So they're looking to take their shares back while money is cheap, and who wouldn't? So I think that Tim Cook and company are doing a very good job. So Apple remains a very strong, profitable, good company. And that's going to keep retail investors and also Wall Street investors pretty strong, staying in that stock. And so what has it done for the NASDAQ as a whole? Not much. That's about all I can say. It has done much. I continue to sit on the fence in terms of our short-term count here, in that I actually did put a 4 here, and then I changed my mind and said no. And the reason is because then I would then have to count this as 5, or as the beginning of a 5-wave structure. And while it can be a triangle, so to speak, so each of these waves, 1, 2, 3, 4, 5, would be 3 waves. That's possible and not uncommon to come into the position of the 5th wave. But I just have to see how this plays out, and I'm going to now explain why. I still can live with this being the A, this being the B, and actually this being the C, which would tell us that we are now heading lower in a C wave decline. Now, what we did see today is the market came down and held support at 878. Actually, the support was just a little bit lower. And it held it very nicely, rallied very strongly. So there's a couple of things that I got going on here, that this was wave 1 and then ended here. And then we have wave 2, or this was wave 1 and they went A, A, B, and then a C. So either way, this can work out to be still that C wave down. And the other companies that reported today, we had Apple and we had Facebook. Facebook is going to end up about 19, 20 bucks as we start the day tomorrow. But even that, you're seeing that it's not massively moving the future. And so I have to stick to what I'm thinking. And I just want to go down and look at this internal here. And it is extremely sloppy. It's extremely rangy. And so it's not a real clean, concise pattern, which keeps me on the fence in terms of that we are going to see a stronger move up, which is going to eventually take us over 14,059 and on up towards those additional Fibonacci numbers that we have been talking about. So if I go back out to the hourly chart, I continue to have this is our wave 4. Now remember that we also were talking about that this 3, and then this would be the 4 to end the 3rd, and that still is very much alive, very much alive. And what would really clear this up or clean it up is if we just went ahead. If this would have powered up above 14,000 this afternoon on these earnings. I mean, Qualcomm, they came out okay. Facebook came out okay. eBay disappointed. And I don't know if that's how much weighting eBay has in the NASDAQ 100. But, with Apple blowing off the doors and the stock not going through the roof, which it may do overnight and it may do tomorrow. So we're going to hold off on exactly what is what. So I'm going to replace some Fibonacci that we have to see what indeed. Now, if this is just a wave 2, then it's going to be coming in from here. Oh, I got it on the wrong thing. It's going to be coming in from which would be the bottom of this particular wave. And that's going to be wave 1. So you can see that we came down right there to 82. The 50% level was actually at 74, and we almost got to it. We did manage to hug and hang out around the 200-day moving average. And that was a positive for continued upside, but then it just kind of just stuck in a range. And even after the earnings came out, it still stuck to the same range. Went up and made a slight new high on Apple, coming up to 13,993, but that was about it. And so I'm a little bit disappointed in the market that obviously they're not buying into the blowout, but yet we've not seen the whole result in tomorrow morning, the opening, and everybody's had overnight to think, et cetera, et cetera. So here's how I'm going to leave this for right now. We continue to find the support in these levels. If this market is going to continue down in what we're calling a C wave, sloppy as it is right now, we have to continue to allow for it. We continue to have support at that 75 level. And then we have support down here at 35, 835. Then we have additional support at 804. And then we've got a little bit of a zone where at where this wave 2 or C well, actually, it won't. It's not related to it. So excuse me for that. At 13,014. Now, wave C, we're going to take that off. We're going to go back and now draw, if indeed it is a wave C, that where its potential could come, because we're going to now relate it to wave A. And so again, this C wave, we have 67.25, 867.25 coming up. We still have the 200-day moving average. Then we have 824, 825, and we have 794. And then we come down to this level, as we spoke about yesterday. This is where wave C, if indeed it is, would be equal in length to wave A at 13,688. And that zone actually is 714 down to 688-ish. And that's a very strong contender if indeed this is the C wave. And then the next level would be all the way down into this zone. And we can actually push the zone. We can say 603 down to 465, 66. And with the primary number there being 0.382 of wave 3 to finish this minor fourth wave. So don't forget that what we're doing is an ABC of a minor fourth wave. So that still remains my preferred count because the market is not really telling me much beyond that. We continue to run the alternate and the preferred with equal weighting right now because it certainly can turn and it certainly can go up and one rally. We're one rally away from getting back up into new highs, which would then give us stronger power to put a 4 there and allow this to then work itself out. So until it does break above, I have to consider that it is, again, going to continue to move lower. Now, all of the big titans are basically out. I think we've got some outliers. We've got Twitter coming up, and I don't think Twitter really will have that much pull on the NASDAQ as a whole. So we have Intel's out, Microsoft's out, Google's out, Facebook's out, Apple. Amazon comes tomorrow. So that's our last hope that we're going to get ourselves back above there. If you're hoping for, you know, a fifth wave rally, that's going to, Amazon should be able to provide that. Now, Amazon's basically now gone up 2 days in a row in anticipation of these earnings. And they're just hovering right below $3,500 a share. That's pretty rich for Amazon, but Amazon is another strong company that blows the doors off because they're very efficient and they get the job done for what they're out there to do. And we cannot forget that one of the major components of Amazon as a company are Amazon Web Services. And that is kicking butt against a lot of its competition. So we've got a lot to hold on to. We have upside numbers, we've got downside numbers. And if this market intends to just explode higher, we know we've got our first stop is about 14,124, 125, and then 14,200. And would Amazon on itself have the ability to push this market up 100 points in NASDAQ 100? Not unless everybody else went with them. So in other words, you know, they come in and they really go back after Facebook. They really come in and go after Apple. They really do, you know, continue to push on Google, which at one point was up $150, ends up closing only up 72 3/4. So, you know, we have things that can happen in the morning and we'll have to wait and see. So upside, we have the current high at 14,059. And then we do have resistance just above all that at about 14,065. And then we have 14,085. We have 14,125 and 102, 125. And then we have 14,200. And then we can go up above that zone to really that the number comes in at 14,225. So that's what we have. Downside, we've got our numbers right here. And just remember, folks, you trade what's in front of you and you trade with your moving averages. Do not get married to a trade. If the stocks start to go up and they're breaking above and your moving averages are in alignment, please do not carry a short position unless you're intending to and you're going to build on it, because you'll get wiped out. Same on the downside. You know, today we did have some off the wall declines early, like right in here. And this one this morning, it had gone up 13,981 and then started to come off. And we were, I don't know what. We were actually, I was not looking for it to get past the 15-minute 50. Like, look what happened. So start buying there. Oh, it goes up. Oh, aren't we heroes? And then boom, 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 all the way down to 13,878. And my first point to get long was 13,946. And I believe I used 948 at the time. I'm reflective. But this told you, get out, do not hold it long. It started breaking down. This is the 15-minute chart. It started breaking down through the moving averages. Do not hold a position. The market is telling you, you can be long if you want to, but we're going to annihilate you on the way. So please pay attention to your moving averages, pay attention to your stops. Always, always, always work with a stop. Be able to say, I'm wrong, and reverse and go with the market. It is totally possible with the way the markets are moving and particularly the way the NASDAQ moves, to if you get caught in a bad trade and you end up dumping at $500 or even $1,000, the market continues to provide. As long as you can clear your head, get back to trading, doing what you know how, and you will earn that money back and then some. And that's the voice of experience. I'm telling you, it's possible. And that's where I'm going to leave this for today. Have a good trading day tomorrow. The next update will be Thursday, April 29th.